Welcome back to the channel, everyone. It looks like the SEC is finally starting to investigate Ken Griffin and Citadel for his lies. And I also want to touch on some of the warning signals for potentially the greatest crisis in world history. So stay tuned and let's make some money. But before I dive into the video, if you haven't already, be sure to sign up with Moomoo using the special Thomas James investing promotion. Not only do you get a free stock worth up to $350, and not only do you get a second free stock with a guaranteed value of $50 on top of that, but you also get a third free stock with another guaranteed value of $30. So that's at least $80 in guaranteed free shares just for signing up with Moomoo and depositing at least $100. You could always sell those shares and get 2 entirely free shares of AMC just for signing up. Linked in the description below. But this promotion does end on the 20th of October, which is next week. So guys, be sure to sign up if you haven't already, and if you have, you will get your third free share from today. And now I want to dive straight in with the key information. So, US SEC opens inquiry into Wall Street Banks' staff communications. The US Securities and Exchange Commission has opened a broad inquiry into how Wall Street banks are keeping track of employees' digital communications. SEC enforcement staff contacted multiple banks in recent weeks to check whether they had been adequately documenting employees' work-related communications, such as text messages and emails, with a focus on their personal devices. Now, you may remember a few months ago, the SEC actually confiscated Vlad Tenev's personal telephone or personal mobile and combed through all of his text messages and emails to see what kind of communication he had. The industry sweep is a further sign that the SEC is ramping up enforcement under its democratic leadership and highlights the challenges Wall Street banks face keeping track of staff communications in the work-from-home pandemic era. The SEC periodically conducts sweeps to quickly gather information on issues it suspects may be widespread. Sweeps can sometimes, although not necessarily, lead to formal probes. And therefore, clearly the SEC expects that inappropriate communication between different employees is currently widespread. The sweep appears to stem from a probe the agency has been conducting for some time into an individual financial institution, 2 of the sources said, without naming the firm. In August, JP Chase disclosed that it had been fielding regulatory inquiries concerning its compliance with record preservation requirements in connection with business communications sent over electronic messaging channels that the bank had not approved. It said it was discussing a resolution with regulators without specifying which ones. And therefore maybe this individual financial institution refers to JP Morgan instead of Citadel, but the sweep now appears to impact multiple firms and pretty much all financial institutions, including Citadel. The SEC and the Financial Industry Regulatory Authority, or FINRA, Wall Street's self-regulatory body, require broker-dealers to keep records of all business-related communications. Banks have to walk a fine line to comply with these requirements without infringing upon employees' privacy, said one of the sources. This part is actually really interesting because the SEC and FINRA should already know if Citadel have spoken to Robinhood and if Ken Griffin has indeed spoken to Vlad Tenev, because they require broker-dealers to keep records of all business-related communication. But I suppose this conversation could have obviously happened off of the books on a personal mobile device that isn't being tracked by Citadel, but I guess we won't know for sure. In a speech last week, the SEC's head of enforcement, Gerbig Raoul, warned the institution should stay on top of the many issues raised by the increased use of personal devices, new communication channels, and other technological developments. Failure to retain and produce communication records can impede regulatory investigation. Last year, Morgan Stanley actually fired 2 top executives due to the unauthorized use of WhatsApp to discuss work matters. And now you may have also seen, but Anonymous posted on their Facebook story this morning, and they posted saying, all you have to do is hold, this thing is going to the moon. Now I wonder if this is in relation to AMC or GameStop, or maybe Shiba Inu, or other forms of cryptocurrency, or something that we don't yet know about. But it would be super interesting to see Anonymous get involved with the AMC and GameStop squeeze. I think if anyone could somehow hack the dark pools and ban dark pool trading, Anonymous is probably the people to do it. Now I also wanted to touch on Evergrande and also explain how it's going to kind of impact on AMC. When Evergrande falters, which they will, so will Bank of America. And with that, so will the top 3 short positions in AMC, and therefore we will see a boom boom. Obviously Bank of America is the prime broker for Citadel, Simplex and Susquehanna as well, and therefore they basically route all of the transactions on behalf of those 3 firms. Bank of America also holds a fairly large short position in AMC, and therefore if Bank of America falters, then so does, I think it's like 96% of Citadel's transactions falter as well. And on top of this, there's also some new Evergrande default fears. Evergrande could be formally declared default by October 18th to October 19th, so basically like 5 or 6 days from now. Property firms are the top losers in the Shanghai Exchange traded bonds, and some property shares have gained on hopes of policy support, but I don't really think that support is coming. Debt-saddled Chinese property firms took heavy fire in the bond markets on Tuesday, after the poster child of the sector's woes, Evergrande, missed its 3rd round of bond payments in as many weeks as others warned of defaults as well. A wave of developers face payment deadlines before the end of the year, and with Evergrande's fate looking increasingly bleak, fears are mounting of a wider crisis, just like I've been telling you for weeks now. Weary Evergrande bondholders still haven't received almost $150 million worth of coupon payments that had been due on Monday, although there was little surprise after the firm had skipped 2 other payments in recent weeks. Evergrande has maintained its radio silence for weeks, and markets are now counting down to an October 18th to October 19th deadline when it will be formally declared in default if it still hasn't stumped up the cash. A hedge fund manager, Peter Kistler, said, "I don't see the recovery being particularly high." He said, referring to what Evergrande bondholders would get if Evergrande gets broken up. "I think 20 cents for every dollar of the bond's original face value is more or less fair, so an 80% loss on investment for those bondholders." The IMF said on Tuesday that China does have the ability to address the issues linked to Evergrande's indebtedness with the fiscal capacity and the legal and institutional tools. But also don't forget, China implemented those new rules in the first place that these Chinese property developers have to meet to make sure they're not too over-leveraged. And it's just that a lot of these property developers don't and can't meet these new rules. Therefore, even though China have the fiscal capacity and the legal and institutional tools to help out, they can't help out because by helping out, they're basically just digging these property developers an even deeper hole. The IMF's report, however, said that while contagion so far has been limited to other financially weak property developers and lower rated firms, if the situation were to escalate, there is a risk that broader financial stress may emerge. Market indicators also show how contagion is slowly spreading to other high-yield markets in the developing world. Kistler highlighted how most emerging market companies whose yields were already around the 10% mark have been hit, and even riskier sovereign markets like Ecuador may be suffering some blowback. And therefore, if it's already starting to impact some of these developing countries, I don't really think it's going to be too long, maybe a month, maybe 2, maybe a few more, before it starts impacting the US and the UK financial markets as well. Now, I also wanted to touch on some of these warning signals of the greatest crisis in world history and how you can save your assets. As inflation accelerates and seemingly secure markets like Chinese property continues to destabilise, investor concerns of an impending market crash are growing, but it can be easier to make money in a disaster than a thriving economy. The biggest crash in world history could happen as soon as this month, according to the author of Rich Dad Poor Dad, Robert Kiyosaki. He tweeted saying China's Evergrande group cannot pay, valuation of properties is fake, and will real estate crash spread to the UK? Yes. This daunting warning has left many investors fearful, especially since the month of October has a track record for stock market crashes, like the Wall Street crash of 1929 and infamous Black Monday of 1987. The founding partner of Capital Markets Academy said generally, traders are expectant of a bullish nature, and in 2008, when the US House of Reps rejected the bailout and the likes of the Lehman Brothers collapsed, many became millionaires. As a trader, rule number 1. Never be overexposed to any trade, as you must always have more than enough capital and liquidity to change your trading course or strategy. During the 2008 market crisis, the Dow Jones dropped over 777 points, making the bears of the day overnight millionaires. And the Dow Jones is just one success story. Basically what he's saying is we see indices like the S&P 500 or the Dow Jones gain 1% in a day. Sometimes in a great day, we might see 2 or 3%. and that's not bad to make profit on. But where some of the best opportunities to make profit actually are is if you're shorting one of these industries like the S&P 500 or the Dow Jones, and if it drops 10, 15 or 20% in a day, that's where you can become an overnight millionaire. Now finally, I also wanted to touch on another potentially corrupt politician. I say potentially because I'm not trying to get sued, but Maxine Waters purchased One United Bank stock, a minority bank, back in 2004. Her husband then joined the board. In 2008, she asked the Fed to bail out minority-owned banks. One United received $12.1 million in bailout funds, and Waters did not disclose her financial ties. Obviously, if these banks didn't get bailed out, they would have gone to zero, and therefore Maxine Waters just saved her own investment. Maxine Waters acts like she's for the middle class, but really she's just serving her own self-interests like all politicians. And even to this day, she still holds those shares in One United Bank. Guys, be sure to let me know down in the comments below what you think about the SEC finally investigating firms, potentially Citadel, for inappropriate communication. And while you're down there, be sure to sign up to Moo using the special Thomas James investing promotion, which does end on the 20th of October. Linked in the description below. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.